Well, resale flat prices in Singapore grew the fastest in a decade last year. It went up by 12.5% on year. That's a figure that took many analysts by surprise. Private homes also got more expensive, rising by 10.6% in the same period. And market watchers say the government's recent cooling measures will only begin bearing fruit this year. Rebecca Mateo with the report.
The title of best-selling condo last year goes to Normanton Park. A third of its units were snapped up within the first day of its launch last January. So far, close to 80% of units have been bought, despite the above-average price tag of around 1,800 per square foot. It's in the rest of Central region where prices have gone up the most, by nearly 7.3% on quarter. In fact, all other regions, including the city centre, got more expensive as well. Overall, prices rose 5%, and compared to the previous year, it's a 10.6% jump, the highest annual growth since a decade ago.
A lot of people are actually looking for houses. Some of them actually upgrading, selling their existing resale flat and upgrade to private condo. I think this 5% increase is not sustainable in 2010. That environment compared to current situation is quite different. 2010s, we see recovery in the economic fundamentals, strong GDP growth. I think this time round, the increase amid the uncertainty associated with this pandemic, we see people actually still enter the market.
Still, market watchers say the impact of last December's cooling measures will set in only from this year.
We expect prices of private homes to stabilize this year and probably rise at a much slower pace of between 0 and 3% when compared to last year.
At the same time, public resale flats prices are also soaring. Last year, 215 resale flats were sold for at least $1 million, the highest ever. Overall, resale prices increased 3.2% compared to the previous quarter, and by 12.5% on year, exceeding analysts' expectations. At least one says the trend is set to continue. This despite cooling measures and a recently announced pipeline of 23,000 public housing flats this year.
We are not expecting prices to fall because demand is likely to remain robust this year, given that construction delays will still continue for some new flats, and overall employment rate is actually still quite healthy. So most sellers may not be in a hurry to sell their flats or face financial difficulty to drop prices excessively. So as such, we anticipate that HDB resale prices may grow next year, but at a slower pace of between 5 and 8%.
The Housing Board delivered about 14,500 new flats in 2021, higher than the number handed over in 2020.